Hi, this is Rahul Sharma here from JM Financial. Well, this month we bring you a special report, Kalki 2024 AD. Nifty is at 24,000 and we bring you an exclusive list of stocks that you may hold in your portfolio which can be sold, and a list of stocks which can be bought with the same money. Well, why the name Kalki? So if you read about Kalki in the Puranas, it is the new avatar which ends the period of destruction, or in market terms underperformance. The list of stocks that we have curated here are exactly those stocks which have not participated in this bull run the way the large cap stocks, the way some of the stocks have done in the last few weeks. So we have two lists. First one is the hit list, or the list of stocks which are extremely overbought technically on long-term time frames. These are stocks, if you are holding in your portfolio, we advise to book profits. And another is a wish list where we feel these stocks are technically placed to outperform the market in the months to come. Let us take them one by one. So coming to the hit list, a lot of these stocks are from sectors that you would have seen which have done well. For example, capital goods space, something like an ABB, Siemens. Now these stocks are as overbought as they have been in the last decade. So these are 5-year, 10-year, 15-year time frames where these stocks have done so well that they have topped out in terms of their technical strength on a monthly basis and in this entire time frame. So something like an ABB, the current RSI is at 91. The all-time high monthly RSI for the stock was 93.7, and this was way back in April 2006. And guess what? We are just 3% away from this all-time high RSI. So in case you hold this stock, it is advisable to take profits, and this is not the time to be greedy in some of these names. So just to throw some light on some of the more bigger names in the list, something like a Bharti Airtel. Now this stock has enjoyed a period of 4 years of bull run. So I remember 2020, the stock saw a 13-year breakout, post which, and the price was approximately around the 550 mark, and the stock has come a very long way from that period. So in case you have a long-term holding in Bharti Airtel, we advise to book profits in the stock as the current monthly RSI is at 84 and the all-time high RSI is at 92, which was last recorded in May 2007. So as you can see in the list, it's a big list, 26 stocks to be precise, which are extremely overbought and very close to their all-time high RSIs, something that can be looked upon for your long-term holdings. So another big name that comes into this list is NTPC. Then we have Siemens, we have Trent, which has done extremely well, and we also have the likes of PSUs like Cochin Shipyard in the same as well. So these are the stocks, they have delivered fantastic returns over the last 12 months, and this is the right time to be fearful about them. Now coming to the wish list. So the wish list is all about the stocks which are on our buying list, and these are the stocks A, which have not participated in this bull run, B, which possess very strong technical setups, C, they are on the verge of a big technical breakout, and lastly they have a big upside potential anywhere in the vicinity of 30 to 50%. So if stocks have met this criteria, we have taken NSE 500 as the universe. So in the NSE 500 universe, we have identified the list of these stocks which are very ripe to be bought at these levels. So the first one to begin on this is from the pharma pack, Arti Drugs. Now clearly the stock has been an underperformer in the last 4 months. The entire pharma space has been under pressure in this entire period, but now we feel the time is right for a turnaround, and Arti Drugs specifically can see a breakout and play a big catch up. The targets are coming anywhere in the vicinity of 750 to 800. The second one on the list is Affle India. Now this stock also has been consolidating for 3 years. IT as a space is reversing, and the way this setup is, we feel the stock can deliver an upside of up to 1500 to 1700 in the next 12 odd months. If you watch closely, the volumes have risen in the last couple of months, and month on month it has seen increased buying interest along with the breakout that we've spotted in the closing of June month. Now coming to the third idea in this list, Alkymines. So chemicals as a space has been in a bear market, no two ways about it. But from the reversal candidates, this is one of the names where RSI seems to be increasing. The more and more time the stock has spent in this channel, the RSI has improved, and this quarter we witnessed a good jump in the volumes in the cash segment. So we feel once the breakout does get confirmed, once the channel breakout does happen, there can be a big upside, big catch up that can eventually take the stock to its previous lifetime highs. So a big upside placed in Alkymines as well. Going alphabetically, we have another stock, Ashok Leyland from the auto space. This is more of a momentum candidate. The stock is already doing well. But if we zoom out a bit, it has after multiple quarters, in fact 2017-18 onwards, we have not seen this stock take out these numbers on a quarterly basis. So around the 200-220 area is where multiple resistance for the stock were placed. They have been taken out, and we feel the stock has entered into a blue sky territory, which translates into a sizable upside going into the next 12 months. So difficult to sort of gauge whether this will be like an immediate move, but the trend remains positive as long as we trade above the 200 mark, the target seen in the vicinity of rupees 300. So then we have another stock from the mid and small cap space, Avanti Feeds. Now this stock has been underperforming since 7 years now, so a lot of consolidation, a lot of pain has been there in the stock. This month there has been a significant jump in the volumes for the month of June. The RSI seems to be improving, and we feel the stock can head almost towards the 4-digit mark. So right now, the stock has given a confirmed breakout, and the more it spends time above this falling trend line, we feel the chances are pretty high for a new bull run into the same. So tire stocks have also come into they have also started buzzing in the last few trading sessions, and Balkrishna Industries is no different. Now if you watch closely, the stock has formed a rectangular pattern on the monthly charts. In fact, it is 32 months of sideways movement the stock has witnessed, and the current breakout, we feel there can be a slow steady up move towards the 3800 to 4200 mark. So there are two targets in place for Balkrishna Industries, and we feel the time is right for the tire stocks to roll from here on. Housing finance companies are also coming back into the buyer's radar. So from that space, Cann Homes is something that we like particularly. The stock has formed a very, very strong base around this area, and we feel the 680-720 range will act as a launching pad for the stock. So multi-month, multi-year consolidation has been taken out in Cann Homes, and over the next 12 months, as the stock gets into a blue sky territory, we feel there can be a very, very strong outperformance in the same. So difficult to put a target to it, but we feel the direction is pretty much north, and we feel one can have a return of anywhere between 30 to 40% going into the next 12 months from here. Private banks have come back with a bang, and it is the smaller run banks where we have our eyes on. City Union Bank in particular is forming a very, very strong technical setup. The risk reward is also very, very favorable, and we feel once the breakout happens above the 180 mark, one can look to see bigger targets in the same. So one can accumulate at these prices, but once the breakout happens, positions can be added, and we feel this stock has the potential to go all the way up to 250 and above. So this is one of those stocks from the private banking space which has not done as well as the big blue-eyed boys, and we feel the time is right for the smaller banks to play catch up from these levels. Now the next stock is also from the chemical space. It is a major, Deepak Nitrite. Similar pattern seen in Deepak Nitrite to what we had seen in Balkrishna, although both of them are from the same sector, but a similar setup means we could very well be headed towards the 3200 to 3400 mark in the same. So one can look to buy at these levels, and the breakout happens at 2700. We are very close to that. Once we get a successful close above it, we feel one can look to add positions on the long side. Then from the pharma space, we have another name, another heavyweight, DV Slabs. The API manufacturer has already broken out, and we feel there is a 20% upside to be had from current levels. So one can look to stay put in the same. In case you are holding on to it, time is ripe to add more long positions, and we feel in the next 6 to 12 months time frame, this stock can outperform given the backdrop that pharma as an index has been doing extremely well. So again, flipping back to another stock which is from the chemical space, Fine Organics, we feel the best is yet to come. After the big bull run that we saw from 2018 to 2022, we feel the stock has cooled off for a reasonable time, and now the cool off, once it is showing green shoots of the cooling off coming to an end, which means 7,300 is where we have our eye set on in the current setup. Coming to another pharma stock, Granules. Well, this is one of those relatively stronger setups as compared to the chart structure is concerned, and we feel that the stock can head towards the 600 to 645 mark. One can look to buy at these levels, and in case there is any dip from current levels about 5 to 6%, one can look to add over there as well. And we feel along with the pharma pack, Granules can also do well in the near future. So another horizontal breakout is seen in Hidel. It has been 16 months of consolidation for the stock. There has been a pickup in the volume activity. RSI also shaped up very well. So all the key ingredients for a breakout are very much there in the stock. And as a space, chemicals is something that is reversing in a very strong way. So we feel that this stock can head towards its targets of 410 in the first phase, and even more than that in the coming weeks, as the chemical space does well from here. Okay, so telecom, we had a sell rating on one of the biggies. So Bharti Airtel, we had recommended a sell in our hit list. After the recent price hike, telecom companies are doing very well. We had a sell on Bharti Airtel, and we are recommending a buy on Idea. Clearly, the two big heavyweights in the telecom space, Reliance and Bharti, have done their bit, and we feel this rub-off can be seen in Idea. So Idea has seen an expansion in volumes on the monthly basis. Last 3 months, the volumes have been growing, and technically we feel the bullish pole and flag pattern can see the targets of 24 to 28 in the next 12 odd months. So we remain positive on Idea, and the stock can be bought at these prices, or in case there is a dip in the near future, the dips can be utilized as buying opportunity. Then on the banking space, we have IDFC First Bank, which has been underperforming. There is a downward sloping channel, the breakout of which happened early last year, and now we feel that another round of breakout can take place in the same. One can look to buy for targets of 100 as an immediate one, and 115 possibly as a next target, and can be bought at these levels and accumulated in case there is a small dip that happens in the near future. So IDFC First Bank remains a bullish delight, as we expect the private banking space to continue doing well in the near future. Well, the blue-eyed boy from the IT space is expected to turn around in a big way. So after months, to be precise, 2.5 years of underperformance, we feel the stock has reversed in a big way, and we can foresee a target of 18 to 20% in the same. So the breakout has not happened yet, but the way some of these IT names, the quality of recovery that we've seen in the IT index formed a base around the 31,000 mark, post which we saw a very fast recovery in June. All that put together, we feel IT can outshine, and Infosys remains the favorite pick in the large cap IT space. Then we have Jain Irrigation from the higher beta small cap mid cap space. 14 years of breakout is in place around 90, and if that happens, we feel the stock can double up from here potentially in the next 12 months. It is trading above its short term, medium term, long term moving averages. One can look to accumulate at these prices, but once it crosses 90, one can look to add long positions in the same, and we feel there is a big breakout that can be had, especially in something which is slightly on the trader side. A lot of traders are very much active in the same, plus it being a high beta stock also helps. Coming to the metal space, now metals has been doing very well over the last 12 odd months, and we feel There is another high or rather a multi-year breakout took place in Nalco. The stock has been doing very well once it crossed the 140 mark. Since last few weeks it has been consolidating, but we feel the trend, the undercurrent of the trend is still very much strong, and the next projected targets for the stock are seen anywhere in the vicinity of around 240 250. We feel metals as a play can do well, and Nalco remains our preferred pick as far as the technical setup is concerned in the same. We have the budget coming up, and RCF is one stock where we feel there could be a buying interest that can emerge over the next few trading sessions. The key technical parameters are very much positive, trading above its moving averages, positive crossovers witnessed, and we feel the strong outperformance is likely to continue. So this is one of those stocks which are on the high momentum side, and one can look to participate in a medium term upside that can be had in the same. Then from the IT pack we have Root Mobile. This stock is very much similar to what is happening in the IT space. The current setup, the projected targets are seen at 2300 to 2500 in the next 1 year's time frame, and one can look to add the stock at these prices as the breakout seems to be confirmed, especially after a big volume jump that we've seen in the month of June. Another one from the IT space which has been our favorite, we have recommended this multiple times, Steel Authority of India. Multi-year breakout has happened, so the current pullback is only a retest of the same. So around the 150 mark, the risk reward is very favorable on the long-term charts, and we feel the stock can potentially double over the next 24 odd months. So if you have a 2-year plus kind of a horizon, we feel SAIL is one stock which can be bought at these levels, and with a lot of potential going into a lot of potential upside that one can expect from current levels. Okay, so another stock which comes from the IT space is Tech Mahindra. It is scaling at speed. We feel that 1600, 1800 is where the catch-up can be for the stock, and especially after a month of sideways consolidation, momentum is back into the IT space. And how? So technically speaking, Tech Mahindra looks pretty solid from current levels and can be added on dips and at current prices for a target of 1600 as an immediate one and 1800 over the next 12 odd months in the same. One metal stock which is metals and mining stock which is transforming for the good. It is one of the biggest breakout candidates from this space. 14 years of resistance line being tested this year. In fact, this was taken out in May a couple of months back, and this is very much similar to what we witnessed in Bharti Airtel way back in 2020. Well, Bharti did create massive wealth. The stock more than tripled from where it was way back in 2020, and we feel the next 2 odd years, this being a relatively high beta space, metals as compared to telecom, we feel one can look to buy Vidanta for a potential doubler target from here. So yes, it is an optimistic target, but we feel the way the technical setup is, this rally can have long legs, and one can participate in this upside above the 450 mark, which is where we remain very bullish on the same. Okay, so coming to the next stock, which is a dark horse, Walternagar Industries. Well, this stock was in an elongated period of consolidation. The breakout has happened in this week as this recording takes place. Above the 250 mark, the bias remains positive. It will be unfair to put a number target to it, but we feel this can be a potential multi-bagger. Look to buy at these levels. In case there is a dip in the same, one can look to add into that dip. And from an investment perspective of 12 to 24 months, we feel that a significant wealth creation can happen in this stock the way the technical setup is poised. So this remains our dog horse which can outperform the entire basket. Coming to another IT name, VPRO. This stock is very much similar to what is happening in the entire IT pack. Another heavyweight which can play catch up, and we see upside of 25% from current levels as the IT stocks have reversed on long-term time frames and can deliver the numbers, especially after we have more clarity on the ECB cutting its rates. There is a possibility of the other central banks also giving a rate cut, which bodes well for the visibility of these companies, especially in the next couple of quarters. So we feel this sector can go in for a re-rating, and we can see significant upside happening in the same. Okay, so the last one on the list is Whirlpool. we feel that the stock is the worries that the stock had, the stock has literally climbed these walls of worries, and we feel the breakout can take the stock upwards of 20 to 50 in the same. So technically the RSI is given a positive crossover, multiple resistances have been taken out, and we feel, especially looking at the way the volumes have developed over the last few weeks, there is more upside that can be had in the same. So Whirlpool remains our last stock on the list, and these are the 26 stocks where we feel alpha can be generated. A lot of clients face this problem of not having more capital to add on to stocks. This is exactly the reason why Kalki 2024 AD report mentions the list of stocks which can be sold first and profit can be booked, and this profit, this capital can be moved on to the list of stocks that we have mentioned. Some of the stocks you may be holding them in your portfolio, you can look to add on to them. Some of the stocks may not be in your portfolio, you can consider them. We feel that Nifty may see a short-term correction, but the overall texture of the market, the overall undertone of the market is very much bullish, and in the next 12 to 24 months we feel there are more highs to be had in the Nifty index, and we feel these are the list of stocks which are probable candidates to deliver the returns that you are looking for. We hope you have a profitable time ahead, and at the same time we are happy to partner you in your investment journey at JM Financial. Thank you so much.
Investment in securities market are subject to market risks. Read all the related documents carefully before investing.